Hey, good morning. This is Mayor Valensky with Driving Markets. Okay, so let's keep it short, brief, and to the point. The Fed Chair, Jerome Powell, was making economic testimony to the U.S. lawmakers and over a 2-day session. And he stated clearly that there is a significant fight against inflation. They underestimated inflation at the beginning of the year. I didn't. I said that inflation is super high, interest is going to go high, but him, Janet Yellen, and all the other super analysts that make about $10 million a year on salaries, they all underestimated inflation, and as a result of that, they've got themselves into a right pickle. So he says the fight against inflation is unconditional. So the markets liked that and they jumped up. So let's just go into that a little bit more detail. When he says unconditional, what does that mean? Does that mean there's going to be a 75 basis points, a 0.75% rise every month going forward? I think yes. I think there's going to be a 75 basis point rise in July, in August, in September, and in October. We're looking at 4.5% by the end of 2022. When he says unconditional, he's preparing the financial markets for a hike, significant hike in interest rates. Don't fool yourself that he's going to start increasing it by 25 basis points or even 50 basis points. It's going to be 75 basis points upwards. Now, that will have a significant effect on businesses, on loans, on car loans, on mortgages across the board. So you have to prepare for that. Now, is that going to be enough to fight inflation? In my opinion, it is not, because inflation is a supply-driven issue. In other words, the starting point of inflation is not that the consumer's gone out to buy, it's the other side of the line where there's no supply. So the lack of supply has caused prices to rise, and that's going to continue over the next 2 to 3 years until the whole of the corona issue is put to bed. But since there's new variants coming out and new mutations, then you can expect more lockdowns in China and more lockdowns around the world, which will have an impact again on supply. And this is taken out of the equation the Ukraine-Russia war, or the Russia-Ukraine war. That's going to continue because Putin's not going to withdraw. So you're going to have inflation on commodity prices going forward. So the price of grains, soya, wheat, barley, corn are all going to go up significantly, and that's going to drive food inflation much higher, which we're feeling in the pocket at the moment. And we're feeling the cost of living is just at an all-time high, pushing all of public sector into a strike mode, as we can see in the UK and slowly in Europe and around the world, looking for 10 to 15% increases on their salaries. Now it's causing significant disruption, as you can see in the UK with the train strike and the tube strike. And that's probably going to be a characteristic going forward. So the only thing that's going to battle inflation, one of the most important things in battle inflation is not necessarily interest rate rises, but getting the supply chain up and running. That is going to be the most important part of the whole economic equation. Until that happens, inflation is not going to go down, and therefore you're going to have a rising interest rate environment, because the central bank's only weapon as far as that is concerned are interest rates. They cannot really impact supply chains. Okay, so that's the bit of background on that one. Furthermore, look at some of the high-tech stocks. Some of the high-tech companies, or most of the high-tech companies, are now either freezing labour recruitment or laying off. So yesterday Netflix laid off 3% of its staff, which is 300 people were laid off or given redundancy at Netflix. Now look at it, this is an indication of where the high-tech sector is going, because there's going to be more and more unemployment in the high-tech sector as liquidity tightens, and as the fact that there is going to be an impact on their growth over the next few years, and their costs are rising. Therefore they're going to have to lay off some people. Remember, a lot of high techs are just simply not profitable, and therefore they've got to cut costs at the lowest level, which is, or the highest cost level, which is staff. And that's what's happening around the world, whether it's in Europe, UK, America, or in Israel, which is a big high-tech sector. They're freezing recruitment and laying off staff, and therefore you're going to see a big impact on the SPACs and the high-tech sector going forward. US Treasury bonds came, the yield came down, the price went up as investors poured into those bonds as a security safe haven. Also, let's look at a bit of forex, a bit of FX. A dollar yen, wow, it's just incredible. The dollar yen is at I won't say all-time high, but it's definitely at a 20-year plus high, and you've got to be long of the dollar as rates rise. Furthermore, what you do have is you've got to look at Bitcoin. Bitcoin seems to have stabilized, but does have a 6% daily movement either side, so great stock to trade. Look at Bitcoin. It's up again today, 21,700. Floated down yesterday about 20,000. So you know where the range is, between 20,000 19,500 upwards. You're probably a buy at 19.5 and a seller around about 22. All right, Mayor Valensky, Driver Markets. Catch me on Instagram and other media. Have a good day.